Hello, this is Jordan. This video is being recorded for Monday, February 6th, 2023. Thank you so much for joining me today. And in this video, we're going to take a look at the weekly outlook for gold and silver after last week and what I would call a nasty reversal. In prior weeks, we'd been talking about key levels in gold, 1950, 1960. There's stiff resistance there. And if gold were to go above that, there was a potential measured upside target of 2020. It looked like after the Fed, gold got up to, I believe, 1970 or so. But as we see so many times, the move you have right after the Fed and their announcement, you get a big move in either direction. And a day or two later, it tends to be completely reversed. And that's what we saw here. And so, and then there was more follow-through selling on Friday. So you look at these weekly charts, starting off with gold, you do see a nasty reversal. I mean, it's just a nasty bearish candle. It augurs for weakness and probably some more selling in the very short term. And the red lines, by the way, those are not new lines. I had the red lines drawn on the weekly charts here. I can't recall the last time I posted a weekly chart for this video. I've been using dailies. But anyway, back to the gold chart. So looking at the weekly here, you do have long-term moving average support, which is right around 1,800. The levels I was thinking about, and maybe I mentioned it last week, 1,835 and around 1,800. Those are the significant support levels. Given this reversal, I think now we have to think about 1,750 in addition to those two. So that's an area level I would focus on. And, I'm not a fan of trend lines, but the thick blue lines you see there, connecting the tops and the bottoms over the last 2.5 years. It is interesting because those are parallel. They fit together perfectly. So that's another thing to think about. Silver had been weak for a while. Silver bottomed first. It led this move. And so, given the weakness that we've seen in silver, the relative weakness, it's not a surprise that this move happened. And so looking at silver, I believe the 200-day, I didn't include it here. I believe it's around, I want to say 21, maybe it's around 2050 or so. But looking at silver, based on that candle, it's probably not going to hold 22. So we have to look at $20 or maybe below that at 19. Those are levels to keep in mind. Then at the bottom, the gold-silver ratio, that's been trending up. So, I mean, you can think about where is that going to go? I mean, if gold goes to, if that goes to 90 and gold goes to, 1750, I mean, that puts silver below 20 basically. So, we're not going to see just a little bit of a correction here. I think looking at everything, the odds are, we're probably going to see weakness here for the next month or two, especially if the equity market has some more upside. And, macro factors, I'll do more videos on this, but looking at the macro factors, the recession hasn't hit yet. If you look at yield curves and, just based on, the average and median time of the inversion to when the recession begins, that doesn't really land until around the middle of the year, June, July, August. That time frame. So recession hasn't hit yet, and it's not time for it to hit yet. And so, maybe here in the next month or so, we get some more strength in the equity market. Maybe bond yields are pulled higher a little bit more. And so that could create more selling. But, even though this sounds dire, if we're thinking about the whole year, likely recession coming, and we know that that's going to be bullish for gold. I mean, the setup is there where if the recession hits around the middle of the year, gold could be weak for another month or two. Maybe it stabilizes in the spring. Then the market starts to discount a recession. steepening yield curve, market discounts, rate cuts, then you see gold rally back to the high and, break out with the first cut or later in the year. So I guess that's a lot more than a weekly analysis, but that's just my thinking of, what could be the path forward after this reversal. Looking at the stocks, I would have hoped that GDX and GDXJ could hold above the 200-day moving averages. I don't think it's going to happen at this point. So looking at support levels, for GDX, I have 26. GDXJ 32. But you could even go a little bit lower than that. You could see maybe 25 in GDX, and then also GDXJ. I mean, there's going to be strong support. Like I said, 32. Then probably in the low 30s. If you look at the correction in 2019 that GDXJ had after the bottom, and it had that rally, then it corrected before the Fed really shifted policy and indicated they were going to cut. Before they really shifted, I think GDXJ corrected 22% at that point, something like that. And so that would put GDXJ down at 32 in this instance. And looking at SILJ, maybe that's a little down or a little aggressive on the downside, thinking that could go down to around 9. But look, if you're going to have a correction, we know that silver and silver stocks are going to get hit harder. And so that's where we are now. It's disappointing that we didn't, that we saw such a nasty reversal. But if we're looking at the bigger picture, there's still the strong potential for a recession that's coming. You look at economic indicators, you look at things like the yield curve inversions. Those things are pointing to a recession later this year. So all this talk of a soft landing is really, really way too premature. But nevertheless, I do think fundamentals for, gold and silver are probably going to be bearish over the next month or two. I mean, gold's underperforming the S&P, so it could be tough here as we get through the end of winter. But, before a real bull market starts, if we see some more downside, that's when you can go for the highest quality juniors out there, the companies that have the best deposits. And those are the ones that you want to be buying in the next couple months if this outlook is right. Like, those are the ones you want to buy on weakness. Then if the recession hits, the market discounts, rate cuts, everything's going up, then you can, as gold is starting to break above 2,000, then you can, look more at silver, look more at, things that are a little more optionality type of plays. So those are just my quick thoughts on everything now. Subject to change, of course, with coming developments, but that's how I see it right now. Thanks, everybody, for tuning in. Hope you have a great week ahead. Leave me a comment. Let me know what you think.